I'm Thomas Friedberger, Deputy CEO of Tikehau Capital. So the year 2021 has been characterized by the strengths of the economic recovery, explained mainly by very strong consumption spending, especially in America. 2020 has been the first year ever in the history of the United States where the country has experienced an economic recession, but our households have had no decrease in their revenues. So the US consumer has spent this money in buying goods, services, and it has also invested on the stock market, which explains the strength of the US stock market in particular, and the concentration of the returns on a limited number of stocks. Unfortunately, production has not been able to follow the pace, creating a lot of bottlenecks and shortages, triggering inflation. And this inflation is now at play in most of the countries globally, especially in the US, in the UK, in some emerging markets, and even in the euro area, which had not experienced inflation for years. The fact that production has not been able to follow is partly explained by the weakness in the capex cycle, investment spending over the last 20 years. And the capex cycle now restarting will probably explain more dispersion among asset prices. So for 2022, we will probably observe the inversion of three megatrends that have pushed corporate earnings for the last 30 years. Interest rates that are going higher, corporate taxes, which are also increasing for obvious reasons, and the inflection point reached in globalization. Those three megatrends have helped tremendously the generation of corporate earnings for the last 30 years. And from tailwinds, they will probably transform into headwinds, which will create dispersion, and it will prevent corporates from over-optimizing what they've been able to over-optimize over the last 30 years, i.e. their production costs by producing where it's the cheapest, their taxes, the level of capital they are operating with, and it will force corporate to invest massively to remain competitive, probably in three sectors: energy transition, cybersecurity, and digitalization of a production process and supply chains. And so we think there are three megatrends here that will be very strong for the next 20 years, and that this cycle of capex is deemed to be the enemy of the equity investor, because good capex, so profitable investments, are only made by good companies that are well managed and where the governance is performant. And so it will create dispersion, making us say that dispersion is probably the new form of correction in a context where central banks will remain accommodative. So what are the main risks for 2022? The first one is the risk of stagflation, which is the persistence of inflationary pressures while the world growth is slowing. World growth could be slowing because the Chinese economy, the second largest economy in the world, has to slow structurally. China is switching its economic model towards a growth model which is more sustainable, more driven by the reduction in inequalities, the addressing of the environmental issue, and more centered on its domestic market to address the dependency issue from the US dollar. So the Chinese economy will probably slow to become more long-term, and this will probably have an impact on the world growth. If inflationary pressure remain, we could have some sort of stagflation. This is the first risk. The second one is the outcome of the tensions between the US and China, not necessarily from a military standpoint, but more on the consequences that the creation of two different systems, two different sets of norms and standards could have on corporates. On the cost side, first to adapt to those two different systems, and on the revenue side, because both the US and China are asking their allies, both countries and corporates, companies, to choose their camp. And so we can imagine that a company doing a lot of business in China will have difficulties doing business in America, and vice versa. The third risk is the cyber risk, which is extremely pregnant because of the massification of the use of data, of the use of internet, the decentralization of the payments. And so this risk, which has also been identified by the Federal Reserve Chairman as the main risk of destabilization of the financial system, is going to be very present in 2022. It also represents an opportunity.
In the bond market in 2022, we're going to be fairly cautious. Looking at investment grade first, the spread tightening potential is fairly limited on the one hand. And on the other hand, the duration risk, the sensitivity to interest rate rising is very high. So we will most likely stay away from that segment. In high yield, though, we are slightly more constructive, looking at fundamentals in the high yield space. The fundamentals of companies are fairly strong. And you're getting still a fairly significant spread pickup compared to what you're getting in investment grade or in government bonds. So for an investment in high yield, we could consider funds like Tikehau 2027, investing in the space in a dated format. We would also look into more short duration strategies to mitigate this risk of rising rates. Funds like Tikehau short duration could be something to look into. In the equity market in 2022, we will be focusing on companies capable of mitigating the inflation risks. So first of all, we'll look into companies with significant pricing power, the companies who are capable of passing through production costs into prices. Then we'll look into companies also with light asset base. When the asset base is heavy, it's very costly to be replaced in an inflationary environment. And lastly, we will also look into companies with fat margins, hefty margins. Those companies obviously will be less impacted if inflation bites into them. So that's one focus, quality companies overall. The second focus will be to also remember that in inflationary times with rising rates, high multiples tend to underperform. In that case, then you really need to be focusing not only on quality companies, but also companies with low multiples. So within the equity selection here, we will mention Tikehau International Cross Asset or Tikehau Equity Selections. Both those funds are focusing in quality names at a reasonable price.